I've received totally real reports that you guys have obliterated the like button and destroyed it so much on the previous video that for some users, they're saying it, I'm not saying it, that it doesn't work anymore. Guys, you've done such a fabulous, tremendous job. It's uncomprehendable. Thank you so much. 718 likes in the bear market just goes to show how even though maybe we're not in love with crypto anymore, we still believe in it in the long term, and we see the light at the end of the tunnel, and we're coming together and showing that we're here. And if you are here and if you still believe in crypto, let's obliterate the like button once more. See if we can reach 700 likes again. You guys are amazing. Thank you to all the crypto kids who watch the videos and support the content. It's an honor recording these videos on a daily basis to you, and I just truly wish you enjoy and find them informative. Of course, the price of Bitcoin has not moved much from our previous technical analysis update. So in this video, I don't want to go into the Bitcoin technicals. I want to focus on the interest rate data and address the individuals who believe that altcoin season is coming soon. That would be a, how to put it, a massively optimistic, in the politest way possible, a massively optimistic expectation to think that altcoin season is anywhere close. I'll go through the inflation data that's coming out on Thursday, the PCE data. What is the expectation? What did we get for inflation data like the producer prices? And how can we use the producer prices to make a guesstimation on the PCE, the Fed's preferred metric on determining where the interest rates need to be sitting? 100% probability that the Fed does not cut rates on the 17th of June, and a 12.9% chance that the Fed hikes rates by 25 basis points, and a 30 basis point chance that they hike rates by 50 basis points. I know that President Trump was saying very nice things about Kevin Warsh. However, I think those nice things, those niceties are going to be reversed quite quickly when the Fed ends up cutting. The Fed chair doesn't make the decision on what the interest rates will be. There is a committee of members who vote, and the interest rate is decided upon a consensus vote, not by the Fed chair. The Fed chair has influence. We'll talk about it. The privacy coin narrative, I promised you to get into it on this video, which I will. I briefly showed you a bearish divergence, and that bearish divergence played out nicely. We talked about the bearish divergence on yesterday's video on the Moonshow channel. So since then, Zcash has corrected. What is Zcash? Is it necessary? Why is Hyperliquid going bananas? Can the same trend and momentum be followed on other cryptocurrencies? I'll jump into that, and we'll conclude with the Iran situation, geopolitical conflict. The price of crude oil bounced from the low 90s back into the mid 90s following a bit of a tension situation from a couple of hours ago. With that, if you would like to see more content like this one, then make sure to subscribe and destroy, well, the like button. It's a figure of speech now, but turn on the notification bell so that you're alerted immediately as these videos come up. They are usually time sensitive and are best consumed in 24 hours. If you're looking for a place to be trading Bitcoin and cryptocurrencies, you can check out the links in the description down below to get the best bonuses available 2 weeks. BTCC, Levex, and Bybit. Currently, BTCC is offering the best bonus out of all of our partners. If you're looking to buy Bitcoin for the first time, buy crypto for the first time, you can do that with a credit card or even Apple Pay using Bybit, and sign up for the Bybit card where you can spend your crypto using a debit card. And I've used the Bybit cards for so long. Never had any complaints. Remarkable product. It's just nicer for me to use in the bull market when I can spend profits. It hurts to spend from the portfolio when you're not making profits. Bitcoin isn't doing much. We'll jump straight into interest rates. The core PCE price index and the traditional PC data up and coming on Thursday. The PCE index is the personal consumption expenditure. It's the Fed's preferred metric for inflation. The previous data point saw a huge jump. February, there was no geopolitical conflict. End of February, 28th of February was the day tensions in the Middle East started to arise. So the whole month of March's inflation data came out in April. So we only have March, which is month one of the geopolitical conflict. We're in May. So we're going to have April's data get shared on Thursday. And then next month, we will have May's data, which will also be high inflation since the prices of crude oil are ridiculously high. And crude oil being higher and the Strait of Hormuz being closed restricts 20% of the world's crude oil supply, disrupts supply chain and logistics, and drives not just energy prices to extreme levels, but it also drives things like clothing and food, since all of these things have petroleum derivatives. And when certain passages are closed, like the Strait of Hormuz, then freight fees become more expensive, and they can make even the vegetables and fruits you purchase from the supermarket go higher. In summary, PC data will likely come out to be, I think it's going to be higher than 3.8%. The producer prices data had a consensus expectation of being at 4.9%. The previous data point was at 4.3%, but the actual came out to be 6%. So March's data was 4.3%. April was like 1.5 times greater than March data. We're going to see April data. I think it's going to be a bad one. I think it's going to be a shocker. And I do believe that on Thursday will result to Bitcoin dropping. Perhaps I'm wrong. Hopefully I'm wrong. But from just extrapolating what we have here for the producer prices, I see personal consumption expenditure going up. Producer prices at 6%. I know I've mentioned this to you before, but I need to stress upon it. If producers are paying more money for the things that they're purchasing, the manufacturing, the goods that they need to manufacture final items they sell, the raw materials. If raw material prices go up, if shipping costs go up, if energy costs rise, their costs are higher. And that increase in costs isn't buried into the balance sheets of a manufacturer. No, it's transferred with higher prices on goods. It's passed towards the consumer. It leads to CPI going to increased levels, and it leads to personal consumption expenditure going to increased levels. And the whole narrative of the new Fed chair, Kevin Warsh, no matter President Trump appointing him and the current administration having almost a mandate of lower interest rates to push markets to greater levels, and this theory of if markets are doing well, i.e. the S&P is sitting at new all-time highs, you should be cutting interest rates. That's all politics. Politicians want interest rates to be lower so they can fuel up prices of the S&P and other markets to even greater areas. That's what all politicians want. And the point of the Fed is to remain independent and not get interference with what a political administration desires, because they want their campaign to look strong. They want their administration to show that they are delivering good numbers. But any move that the Fed takes will have long-term implications. Reducing rates when inflation is sitting at 6% in producer prices, PCE data drifting miles away from the 2%, around the 2% targets. If you were to cut rates, then inflation will go even crazier. It will go to 9% like 2021, 2022. So you cannot do that. Since administrations are only appointed or elected for 4 years, yeah, they want the rates to be cut, because in that period of time, maybe things will go well. But as soon as you go over into the next administration, then the next president is going to get the blame for what the previous president did. So it's super, super important for the Fed to remain apolitical. They are constitutionally apolitical. Fed Chair Powell was able to defend the sovereignty of the Fed with all of his might. That's why I have so much respect for Fed Chair Powell. Let's see if Kevin Warsh will do the same. He said that he would do the same. When we look into the market expectation, I know that everybody wants Kevin Warsh to cut the rates, but we see in June a 2 point, okay, the probabilities are changing by the second here, but it looks like that we could get a rate hike in the year of 2026, and I don't think President Trump will be a fan of that. For the altcoin season, bros, guys, for altcoin season to emerge, you need liquidity. Without liquidity, you don't have altcoin season. Simple as. You have to have liquidity. When we go to the total 2 crypto market cap chart. So this is every single cryptocurrency apart from Bitcoin. When you go to total 2 and you observe and analyze the huge rally in 2020 leading into 2021 in total 2, where you went from a total market cap of roughly 144 billion to 1.69 trillion dollars, a 1,068% increase in just a matter of a year. What happened there? Well, we can take a look at the US interest rate, and we can take a look at the M2 money supply, M2SL. The interest rates went to near zero levels. That incentivizes individuals to borrow as much money as possible. Think of it. If you borrow $10,000 and there is a 0.1% interest rate on the $10,000 you borrow per year, the $10,000, that's going to be, the 10% will be $1,000, 1% will be $100. So you're going to pay like $10 in interest expense for a $10,000 loan. Everybody will take the loan if you're eligible. You can just put it into anything that you think will do better than 0.1% a year, and you'll be in profit. So everybody there was incentivized to borrow money. You had the COVID stimulus checks. People had extra cash in their pockets, and they doubled the M2 money supply. They doubled the money in circulation. The Federal Reserve just pressed the button, and electronically, you saw double the money, the dollars in all of existence, just get released into banks, commercial banks. And then with 0% interest, banks had a bunch of money to loan. People were incentivized to take out money and not keep any money in the bank and put it all into things that they can buy. Trophy assets like watches and supercars, altcoins, NFTs boomed from the excess of liquidity in the market. That's what you need. Interest rates are going lower, right? You compare it to August of 2024. Sure, they're going lower, but you need near 0% interest rates, or this mechanism of altcoin season will not work. You need the M2 money supply to drastically go up, and they happen simultaneously. So M2 money supply increase comes with interest rates going lower. And I know that the M2 money supply is in an uptrend, but for this increase in liquidity to get passed to the retail who end up buying these altcoins, you have to have 0% interest rates. So interest rates is the fundamental economic tool to observe for determining when we could see altcoin season. And this is the "this is bad" part of the video, which I'm referring to. When I look into 2026, the market is expecting 3.75% interest rates. The red dot is the market expectation. It is what the traders are expecting. And I see that to be the most accurate because the money is what determines what the interest rates should do, right? Even the Fed, they follow the US two-year yield. The US two-year Treasury currently predicts a 25% increase in the interest rates. The market thinks that we will get a 25 basis point hike by the end of the year, and then for 2027, another 25 basis point hike, and then 2028, another 25 basis point hike. For 2029, that prediction we can just delete because it's too speculative. But 2028, that's 2 years from now. The interest rates will technically, according to this, which is subject to change, but I don't see it changing very drastically. The picture is clear. Restrictive monetary policy for another 2 years. So if monetary policy will be restrictive for another 2 years, then we won't get altcoin season. Simple as. And for me, in that environment, having my portfolio mostly dominant in Bitcoin is the way to play with what we have in monetary policy. You may be bringing up 2017. Maybe you're saying, hey, crypto kid, but what about in 2017? Monetary policy wasn't, it wasn't so loose in 2017, but we got altcoin season. Well, in 2017, you had only 3,000 cryptocurrencies in circulation compared to today's 55 million. And in 2017, during the ICO boom, you didn't have USDT. So people would have to be in the crypto market. They couldn't shift into stable coins. So yes, you ran but there was so less amount of pairs where money could flow into, 3,000 cryptocurrencies only. And stable coins did not exist. Then 2020, 2021, you had huge amounts of money printing. What do you have today? You have 55 million cryptocurrencies. You have stable coins. There's so many competitors. Like, it's just a different market. So we got to get interest rates to near zero levels. I'm keeping most of my cash in Bitcoin and stablecoin, and I'm not a fan of the economic metrics either. Final point on Kevin Warsh. I saw this post which claimed Kevin Warsh owned $100 million plus in crypto, but that's completely false. Sadly, my community notes has not been upvoted enough to show up on the tweet. But basically, Kevin Warsh and his wife have a total of $192 million-ish of assets, mainly in ventures and other companies. There is indirect crypto exposure in a couple of companies and funds, but most individual cryptocurrency token allocations are less than $1,000 per coin. And it's nothing near the $100 million number which this individual on Twitter states. So please don't believe that fake news. The overall economy, even though the S&P looks like it's doing good, the overall economy is doing bad. This is by the guy who was appointed by President Trump to lead the BLS. The money, what you can buy with the paycheck that you're receiving in America is declining. So your purchasing power is currently diminishing for the first time since 2023. Then you look at consumer sentiment. Consumer sentiment is at a complete all-time low. It is lower than the 2008 financial crisis. It is lower than COVID. It is lower than the 80s, late 80s, beginning of 90s crash, start of 80s crash. Like, every time consumer sentiment is at these lows, you see a crash. You've always seen it. And the divergence between how the stock market is performing and what the individual person that lives in America, their purchasing power, their own internal economy, how that is doing, that divergence and the K-shaped economy idea where the richer are getting richer because they own assets, but the people that don't have assets are getting poorer because their purchasing power is diminishing. That divergence, which is represented with Bitcoin, Bitcoin is Main Street and the S&P is Wall Street. That divergence to me signifies a huge crash in Q4, like what you got in 2018, where that divergence existed between Bitcoin and the S&P, and both in Q4 had a crash. Now, will that happen in 2027, or will it happen at the end of this year? I don't know. I just believe that things like the SpaceX IPO and OpenAI IPO are good signals that the top is getting close. When we forget about inflation and look into the other mandate in the dual mandate system, which is the labor market, more than 85,000 technology sector jobs have been eliminated at this period of the year, 33% higher than the same periods last year, according to Challenger, Gray, and Christmas. Then you look at artificial intelligence, that's causing a net loss of 16,000 jobs per month. New hiring in America is so low that you've basically balanced firing and hiring. So there isn't really people getting hired, but there isn't people getting fired. Unless you're someone who is a fresh college graduate, okay, maybe you're doing fine. But if you're Gen Z like me, you can't get a job. The US birth rate is down 30% since pre-2008. People cannot afford to have kids. That's how bad it is. Look at 1925. Look at this image. For $290 in 1925, you could have bought a full car. God, for $260, you could have bought a full car. For $260, you can, I don't know, maybe have a fancy dinner with 5 people. This is inflation, guys. This is literally inflation. How do you beat it? Well, you beat it by owning assets. And yes, the S&P will probably crash, but after all of these crashes, it ends up recovering. So if you can hold for the long term, then with the S&P, or I prefer Bitcoin, then in the long term, you'll win against the losing value of the US dollar. 100 years ago, $290 got you a car. Now it buys you a dinner at a fancy restaurant. I don't like to go with gold. I prefer Bitcoin over gold, over silver, over the S&P 500, because with Bitcoin, you don't have narratives like Uganda suddenly discovering 31 million tons in gold deposits, which is equivalent to $12.8 trillion, half of gold's market cap. Like, you can't just suddenly discover 10 million Bitcoin from a gold mine, or an asteroid with $100 quintillion worth of gold is able to get mined by SpaceX. Like, these things are not possible with Bitcoin. Bitcoin is fully finite. And to hedge myself against inflation, I would like to buy into an asset that doesn't experience inflation, which gold does. And I like to choose Bitcoin. All right, privacy coins. I know I had to save it for last. I mean, not last, it's penultimate, because I need to cover the situation in geopolitics. And I'm aware that this video has gone on for much longer than I originally anticipated. I hope you don't mind. The privacy era in crypto has officially begun, says Barry Silbert. And he says this because Zcash has gone up to $600. I do not like, personally, I mean, this bearish divergence is concerning. Apart from that, I don't like privacy coins. I don't see why you should be having completely private transactions where you don't know the recipient, the sender, the transaction amount, and the total balances in the recipient and sender's wallets. Like, if you're not a illicit, malicious user of the blockchain, why in the world would you want to be completely transparent, completely private? For me, it makes zero sense. And I think it opens the doors to a lot of illicit activity and transactions. So I'm against privacy coins. Bitcoin's pseudo-anonymity is beautiful, where you don't know the person unless the person decides to reveal their identity with saying this is their Bitcoin wallet. But you at least have a public ledger where it's transparent to everyone on what is the wallet balance, what transaction has been sent, how much, what was the fee that's paid. That's beautiful. You are solving the problem of corruption in the current financial system via transparency. But privacy coins just go 180 degrees in the wrong direction to what Bitcoin is trying to establish. So I'm not a fan of privacy coins, and I think that they will all bleed to zero against Bitcoin in the long term. Narratives like this, they come and go. But it is true that Zcash does have completely private transactions available, which nobody can really do anything about. But it's also true that Zcash has a board of directors, and they could change Zcash if they wish to do so at one point. Whereas Bitcoin has no CEO, has no board of directors, has no, like, it's just, I don't like privacy coins, especially if, period. I don't like privacy coins, period, but I don't like them. I despise them more if they have a board of directors. Like, why would you have that if you're a privacy coin? Like, it defeats your own purpose. Hyperliquid, on the other hand, I see Hyperliquid. I see its use case. I see the hype. I see why it's popular. It's the best DeFi platform out there. It showed its resilience in 1010. There's a lot of users. People seem to have a good experience with it. It's just very crypto native. So if you're a new person joining crypto, you would much rather go with a centralized exchange. Or even if you are like a intermediate to a professional, I prefer centralized exchanges more. I just don't like to deal with, wallets, cold wallets. Cold wallets scare me. Really, it does. Like, I feel much more comfortable with centralized exchanges. Some people think the complete inverse, and it's your decision, right? At the end of the day, I do want to try out Hyperliquid. I actually hadn't got the chance to. I've tried other DeFi platforms, but not Hyperliquid. So I'll give it a go, since everybody's trying it out, and that's the new trend. It's cool to test things in the crypto industry that are gaining traction. But predominantly, I see the reason for why Hyperliquid is running to new all-time highs. I think it's the ETFs, right? You look into the weekly time frame, and the biggest candle surge was in the middle of May when we had the ETFs for Hyperliquid get released today, or this was actually Friday, the Bitwise Hyperliquid ETF. And this isn't like a BlackRock ETF. This is Bitwise. It traded over $40 million in volume on Friday and had $11 million of inflows. $11 million inflow and a $40 million volume on Bitcoin is nothing. But for an altcoin, that's game changing. It is literally game changing. And after the Clarity Act passes, fingers crossed in July, I see more and more altcoins experiencing the beauty and miracle of ETFs. I see the layer one projects receiving that attention first, like, Solana getting better ETF issuers, BNB, Ethereum already is out there. I don't know exactly which ones yet. I mean, Chainlink, we'll get them as they come by. We'll see the S1 filing, so we can still front run it. But more and more altcoins will receive ETFs, and when they do, I think it's going to help out their price action, just like it was able to help out Hyperliquid. Somebody unstaked $27 million worth of Hyperliquid and sold it, and he seems to be selling millions and millions of dollars worth of Hyperliquids. That could affect the market in the short term to a negative direction. So be careful if you have over-leveraged positions. Probably a good idea to reevaluate and just make sure you're well risk managed. And oh my God, Vitalik says going forward, the Ethereum Foundation is going to sell less Ethereum. Well, how amazing is that? Thank you so much, Vitalik. It's very kind of you to do that, actually. It's very, very kind of you to do that. We do appreciate the Ethereum Foundation selling less Ethereum going forward. Thanks, Vitalik. Thank you so much for that. Unbelievable. As finally, the Iran war is still, unfortunately, not over yet. Last night, the US military launched new strikes on targets in southern Iran, according to BBC News, even though we had very, very exciting signs of a deal coming to a finality. WTI surged back to the mid $90 after we got that news. US CENTCOM spokesperson said that US forces did missile strikes and etc., and that the strikes are now concluded for now, they say. Secretary Rubio says Iran deal still possible within days despite American strikes. Iran condemns US attacks on vessels as ceasefire violation, and that Iran may respond and would not hesitate to defend itself. So it's going again into the opposite direction of where you want it to go. Honestly, it's become so impossible to predict what's going to happen. I have no idea. But if a deal is to take place, it would likely take place when US markets are open. I don't know. We're going to live, we're going to see it together, and we will go from there. Guys, thank you so much for watching this video. If you were able to stay tuned until the 27th minute, put the number 27 in the comments because you are a legend for watching the full video. I think it's been the longest video I've recorded in a very long time. Eid Mubarak to those celebrating, and I'll see you on tomorrow's update. Take care. And as Chris MM Crypto always says, as always, bye-bye.